This is an Uncovered Japan company research report on QD Laser, ticker 6613. QD Laser is a tiny Fujitsu Laboratories spinout with a genuinely unusual asset. It is the only company producing quantum dot semiconductor lasers at commercial volume. Its technology addresses AI data links, extended reality glasses, and medical optics. But after an extraordinary share price run, investors need to separate the rare technology from the expectations already embedded in the stock. The snapshot is a study in contrasts. Fiscal 2026 revenue was only 1.37 billion yen, yet gross margin had improved to 42.1%. The balance sheet remained nearly debt-free with an 87.9% equity ratio. Our research score is 11 out of 20. Growth receives full marks and macro fit is strong. But value and share supply demand sit at the bottom because the company remains loss-making and the valuation has moved far ahead of current fundamentals. Around 85% of sales comes from laser devices, semiconductor light sources used in optical communications, biological instruments, sensing, and research. The smaller laser and optical solutions business is built around retinal projection, sending a low-power image directly onto the retina for extended reality and medical applications. QD Laser internalizes the difficult crystal growth, wafer processing, device, and design work, while leaning on partners for mass production and distribution. That is a coherent model for a 100-person research house, but it means the moat is technological rather than commercially proven at scale. The 5-year record shows progress, but not yet an inflection. Revenue rose from 1.10 billion yen in fiscal 2022 to 1.37 billion in fiscal 2026, a compound growth rate of roughly 5.7%. The operating loss narrowed by about 65%, from 930 million yen to 330 million. Management guides to a razor-thin operating profit in fiscal 2027. Reaching that break-even point is the single most important near-term test of the story. Better unit economics have not yet translated into cash generation. Gross margin improved from the mid-30s to 42.1%, close to the midterm target of 45%. Even so, operating cash flow remains negative, and free cash flow weakened as the company invested in new capacity during fiscal 2025 and 2026. Cash stood at 2.74 billion yen at year-end. The balance sheet provides runway, but break-even must arrive before continued investment and losses consume too much of it. Balance sheet risk is limited for now. The equity ratio stayed between roughly 88 and 95% over the period, and debt is minimal. Return on equity improved alongside the narrower losses, but it remained negative at about -7% in fiscal 2026. QD Laser has never paid a dividend and has no buyback or formal shareholder return policy. For investors, total return therefore depends entirely on future business execution and the share price. The strongest part of the case is the technology. QD Laser is effectively the only volume producer of quantum dot lasers, protected by accumulated crystal growth know-how and a 2-decade retinal projection patent stack. It also holds more than 30% of the niche market for certain yellow-green visible lasers. The caveat is equally important. Management says meaningful quantum dot mass production orders remain 2 to 3 years away. A moat that is not yet monetized at scale is both a valuable option and a serious execution risk. The June 2026 TDK Alliance is the clearest expression of QD Laser's strategy. The companies are jointly developing a next-generation red, green, and blue light source module and optical engine for extended reality glasses. QD Laser contributes laser and retinal projection technology. TDK contributes mass production and global distribution. Related patents are being partly transferred to TDK, while QD Laser retains medical and vision support applications. The agreement is expected to create a special gain of about 500 million yen in fiscal 2027, but that accounting gain is not the same as recurring operating profit. Management calls its long-term ambition 10 by 10 to 100. Reach 10 billion yen of revenue within 10 years by fiscal 2036. Against fiscal 2026 revenue of 1.37 billion and fiscal 2027 guidance near 1.85 billion, that target demands a profound change in growth. The opportunity is supported by AI optical interconnects, where temperature-stable, low-power quantum dot lasers could help move data between chips, and by lighter extended reality glasses. But market growth does not automatically become company revenue. Capacity, partners, customers, and cash all have to line up. Valuation is the central risk. Because QD Laser is still pre-profit, price to book is the cleaner lens. At the report date, the stock traded at 22.1 times book value. That was about 5 times its own 5-year average of roughly 4.3 times, and around 17 times the sector reference near 1.3 times. The re-rating followed subsidies, guidance upgrades, the new site, and the TDK deal. Even if the technology deserves an option premium, the current multiple leaves very little room for ordinary execution. The report's scenario analysis is not a target or recommendation. It is a way to frame the range. Against a report date price of 2,578 yen, the 1-year cases ranged from 585 to 2,250 yen. The 3-year cases ranged from 175 to 3,490 yen. The base case was 1,430 yen, and only the bull case cleared the current price after 3 years. That bull path assumes very rapid revenue growth, a 15% operating margin, and a still extreme earnings multiple. QD Laser owns a rare and potentially valuable technology, supported by Fujitsu research roots, government funding, and a credible industrial partner. Its losses are narrowing, gross margin is improving, and the AI optics and extended reality markets offer genuine long-term optionality. Yet the report date valuation already assumes something close to flawless execution of a 10-year roadmap. The practical watchlist is clear: fiscal 2027 break-even, recurring TDK revenue beyond the special gain, new mass production customers, and the pace of cash consumption. The technology is real. The investment outcome depends on whether commercialization can catch up with expectations. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security.